Hi everyone, hope you're doing well. Today I'm going to talk about a brand new stock I'm buying, and this stock is a US growth company. So it's been a long time since I bought a pure growth company on the US markets, but the other week it did happen, and today I'm going to give you guys a few thoughts on why I am buying that US growth company. Before we do start, if you do want to start investing, join eToro with the link in description. I'm currently a popular investor on there, and you can follow me on eToro. And as well as that, what I want to say is growth stocks. Be careful, because quite often I talk about a few stocks that are a bit more safe stocks. Growth stocks definitely have a lot more volatility, and sometimes I see with even the value stocks where there's the less volatility, sometimes people struggle with some of the price movements. With growth stocks, there is a lot more volatility. You are trying to guess futures, so P ratios go out the window with a lot of growth stocks. And because of that, the volatility that can happen on these stocks can be a lot. I see sometimes people get upset with 5% moves in stocks. With growth stocks, you can have days where the stock is down 30-40% and days where they're up 30-40%. Now, that can actually happen with value stocks, but it happens more often with growth stocks. So I just wanted to add that little point there. And what also wanted to add in as well is Hims and Hers. I was going to do a follow-up video about Hims and Hers because I've not made one since my last video, but Hims and Hers has had a bit of a significant pullback since my last video, and I saw a few people already coming out and typing away in the comment section going, oh well, it's down so much now. It's funny how many people want to jump out as soon as the stock goes down that you talk about. But hey, if you guys are on the Patreon, you'll know, guess who locked in some profit. And that's the great thing with the Patreon. I'll teach you guys the best I can about how I do investing, and when I can tell is a good time to be locking in some profit. So with Hims and Hers, I did take a 5% trim on Hims and Hers for a 582% gain. So we did lock some of these profit in when the stock did break to $62 on Wednesday. So hope you guys out there did the same thing. I know some of you guys on the Patreon did exactly the same thing. But anyway, let's stop talking about Hims and Hers because we're here for the new US growth stock. The new US growth stock that I have been buying is Monday.com. So this stock has had a little bit of a whack in the last few weeks. You can see here the stock was a $300 stock in July, and since then the stock has fallen down about 40%. So yeah, significant drop. You know, for your stock, you're coming to lose, coming up to nearly half your value in basically a 3-4 months time frame is pretty significant. And you would think as well, like, something's gone massively wrong with this company in this time frame. And I'll tell you something right now, I'm really struggling to find something that's gone wrong with Monday.com. Yeah, they've got competition with AI, and I think a few people are worried about that, and that seems a big concern around SaaS platforms right now, which is what Monday.com are. But I cannot see why the stock would deserve to fall, to drop 40% ultimately. So yeah, I have been buying Monday.com. Now, originally, this stock came onto my radar as like, oh, maybe this is something to have a little bit of a look at. But what certainly escalated the look into Monday.com is, I don't know if you guys watched it, but I did a video with H-Invest. And on that video, he started saying that he bought Monday.com. And I was listening to what he was saying, and I thought, you know what? This actually sounds really good. And it was him that really kind of made me go, I need to have a look, a bit more of a deep dive into this. And after doing the deep dive, went, yeah, this actually looks really good. I've not bought a growth stock for a while. A little bit harder to value because obviously they're not there generating the, profit levels. It's, can't really use PE ratios. But when you look at the growth opportunity and what profit they can achieve in the future, it could be really significant amounts. And I really do like that. Monday.com, what I'm going to say is that if you want more information on this stock, they recently did an investor day on September the 17th. So literally, 1 month ago? And on that there, it's about a 3-hour video. If you want more information about Monday.com, watch that video because they will tell you why they think they have such a great future going forward. Briefly, I'll mention some of the products here about what Monday.com is. But like I said, for more information, go to that investor day. So Monday.com, it is a cloud-based work operating system. It helps teams manage projects, workflows, and daily work in one place. So when you've got a company with 8,000 employees and you want to see where something is at with a work project, managing a certain customer, that is where you go to, and you'll be able to get the data on who is assigned what job, what that client is up to, everything like that. So you can see here that quite often people don't actually realize how much Monday.com has got as a platform and also what they're expanding into. But you can see they do things like work and project management, which we talked about, workflow automation, collaboration, customization, integration as well into platforms like Slack, Microsoft Teams. Like I think I said on this video here, is it potentially a platform that someone like Microsoft looks to acquire maybe down the line? Data analysts as well, and CMR as well, platform on there at the moment. Now, one thing what everyone's talking about in the space at the moment is AI. Is AI going to be disrupting it? Is this going to be what Monday.com offer at the moment? Our company is going to be able to create that inside their own platform with AI. What Monday.com are doing to compete with this is they're actually creating their own AI product where you use that AI product as well with Monday.com. And they've also added in some of these new services that have like Monday Sidekick, Monday Vibe, Monday Magic. And you can see here, since they launched that product at the start of, like, say, 2024, for example, they've now got 67 million AI actions during that time frame. Now, from where they previously were with their Monday.com platform, these new things that they're adding into their platform are increasing the TAM. So their TAM from where they're at right now is expected to go from 158 billion to 225 billion. And obviously Monday.com, I think they're making about 1 billion of revenue at the moment. So the significant market for them still to move into. Now, Monday.com CRM, which is obviously one of their main platforms at the moment. Now, if you look at some of the new platforms that they're currently running at the moment, you can see that some of the new platforms like Monday Service, for example, is currently Monday's fastest growing product. So that is still very much relatively launched at the moment. And what they're seeing at the moment is their main product that Monday.com offer, the currently usage of that is 6%. So the only, at the moment, companies that sign up to Monday.com are only using one of the products, using two or more products is 6%. So the feeling here is that Monday.com are launching these new products, and what they're going to be able to do is cross-sell these products that they're launching and go, okay, you've already got this product here, how about this one? And it's quite easy to cross-sell to a client when they're already using one of your products that they already have. And they think that they could get this opportunity to 40% through this cross-selling that they currently have going on at the moment. And to show you like a breakdown of where the average recurring revenue come from. So if you look at Monday CRM, which is obviously a big chunk of the proportion here, you can see Monday Dev is currently starting to become a bigger chunk. Monday Service, as you can see here, is growing at very good rates. And the ability of like going, okay, you're currently spending this much money on us, but let's say we could cross-sell you to another point of view. Very easy for Monday.com with this new TAM and cross-selling to have, good amounts of success. They're expecting the total potential of outlook now for revenue to go from 1.2 billion to 1.8 billion of their financial year 27 target. They also expect adjusted free cash flow margins as well to expand during this time frame from currently 26% up to 30% as well as at the moment. Now, they've also announced a share repurchase program. They have an absolute cracking balance sheet. Let's just actually go on to Simple Wall Street. And if you do want to join Simple Wall Street, I've got a link in the description for you guys. But you can see here, absolutely amazing revenue growth. Not optimized to profitability yet, but they are GAAP profitability. Free cash flow wise, great ramp up on the free cash flow, as you can see here. 2026, expect to do around about 404 billion in free cash flow, which on a 9 billion market cap is about 20 times free cash flow, which isn't too bad for a company that is growing at the rates that Monday.com are. They've got a cracking balance sheet. You look here at the moment, there's no debt on the company. They currently sit on 1.6 billion of cash. So you take that from off the market cap, for example, and all of a sudden you're down to what, an 7.4 billion market cap, which, yeah, that obviously makes a big difference here. And compared to when I first started buying Monday.com, there was a little bump up when they actually announced the share repurchase program. Since then, the stock has actually given it all back and then dropped another 15%. So they're actually going to be buying back nearly 10% of the market cap that they announced the other week, and yet the share price has hardly moved off it, which is just incredible. So they've got a really good balance sheet. Ownership wise as well, they are a founder led business, which is obviously great to see. They've got two co-founders running the business, and they still own a great stake in the business, which is obviously a really good thing to see at the moment. On a valuation point of view, so they like I said, they have dropped down to around about 29 times price to free cash flow. Now, like I said, on 2026 numbers, they're going to be about 20 times free cash flow, which, if you look at what historically they've traded at, they've normally traded somewhere between the 40 to 50 range. So the price to free cash flow next year, which we're 12 months away from now, they're going to be about half the price to free cash flow what they normally trade at. And if you look at someone like a HubSpot, for example, HubSpot at the moment, they trade at a 45 times price to free cash flow. So next year, Monday.com is going to be half the price, or more than half the price to free cash flow, or someone like a HubSpot at the moment, which is pretty incredible. You know, you look at a price to sales ratio, it's currently dropped down to an 8. Normally, Monday.com has been around the certainly double digit price to free cash flow point of view, not price to sales point of view normally, which is a significant drop. Monday.com, the growth figures have always been pretty good on them. Like this year, they're expected to grow at 20%, 26% a year. Next year, 22% growth, which I think will get hiked up going forward. Compare that to someone like a HubSpot, for example, they're only growing 16, 17%. So this is incredible growth. The company dropped off the last earnings, which I don't know why it dropped, because to me the numbers look good. Revenue up 26%. They hiked up the guidance as well. I think a few people said like they're not acquiring a lot smaller customers, but we've seen before the company's focus at the moment is not to acquire these small customers. The priority of the company at the moment is to focus on large customers and start cross-selling to the other customers at the moment as well, which looks like at the moment they're going to have good success from. So when you look at Monday.com, really, I think there's so much to like for a growth stock. Like, it's historically low valuations to what it normally trades at. It's historically low to its competitors. The story for Monday.com is easy, really, to understand. That AI has people concerned about AI disrupting it, but the numbers still look good. The company are developing an AI product and other products as well. The main thing that they're going to do is they're going to aim to cross-sell their products that they have. They haven't really been cross-selling, and now that's something they're going to go into. It's co-founder led. It's got a good balance sheet. It's hit gap profitability. I don't know if I said that one, but it ticks a lot of boxes for me at the moment, and yeah, I like it. Now, when we look at the numbers here, let me run some numbers for you guys on Monday.com. So I've done 15, 20, 25% revenue growth. Free cash flow margin of 20, 30, 35%. We obviously saw that they were doing aiming to get to 30% free cash flow margins. I put a 20 times free cash flow multiple, which is what they're at the moment. Obviously, like we said before, they normally trade to like 30 to 40 times free cash flow. I actually should update that market cap because it's dropped since then. So let me just update the market cap. So I've updated the market cap now to 9 billion. Obviously that does not include any of the share repurchase. So maybe I should include that. Let's knock the market cap on a share repurchase program. Let's say we go to an 8.9 billion market cap there. That makes a little bit different. So on a big reduction on revenue growth, free cash flow margin staying about the same and the same multiple, you don't make any money on it. Okay, it's not terrible. If they do grow at 20% and they do get that free cash flow margin to 30% and they stay at the same multiple, you get 60% upside, which is, or 67 with a share buyback in, which is okay. And if they grow at 25%, they expand that free cash flow margin up to a 35%, 20 times free cash flow, you get that 100% upside, which I do like. Now, like I said to you guys, Monday.com is trading at a free cash flow margin way lower than what it normally has. It's normally been about 40 to 50 times, and HubSpot is 45 times. So let's assume that what happens with Monday.com is they do get to a 40 times free cash flow margin again, and the market goes, okay, the cross-selling's going really well, your AI products going really well, and you're not getting disrupted. All of a sudden, that's a lot of upside there on the mid side. Let me just go a little bit more conservative, because one big thing is metric expansion. But let's say they do just slightly underperform on the numbers, and let's knock the free cash flow margin to something where they're at now. And let's knock that down to 30 times. So even then, on the mid side, you're getting 143% to 221% upside. So I think if they carry on growing at the levels that they are, they do expand that free cash flow margin a little bit, and the market calms down about the AI disruption going on here, and the cross-selling turns out to do really well. Yeah, I really like Monday.com. So yeah, I like this one. I'm a buyer of Monday.com. It's the first time I bought a pure growth stock for a long time. I can't remember the last time I bought a pure growth stock. It certainly wasn't in the last year, maybe last 2 years. So yeah, it's good to get some more growth stocks into the portfolio as well. So hope you enjoy it. Let me know what you think about Monday.com, and if you enjoyed it, all I ask is if you can share it in your investing communities. That'd be absolutely amazing to get the video out there. Apart from that, have a great next week, guys, and see you in a bit.